Let's kick things off with the broader market. Stocks rallying near session highs. The S&P 500 and Nasdaq on track for record closes. And Mike, I have to say, I mean, it's pretty surprising and impressive how quickly we're back here to these record levels if we close where we were right now.
Yeah, just barely a 2% dip. Previous pullbacks this year, we've had 6 of them or so, got at least the S&P back to its sort of 50-day average. We did not nearly approach that this time. Now, not to say it's over necessarily, but at least we made a new high, so you reset the clock a little bit on this. And it's interesting. It's the market that's behaving exactly in character as it's been doing for most of this year, but there also were plenty of reasons or excuses for a little bit of buying across the board today, whether you wanted to wait for COVID cases to decidedly seem to roll over in hard-hit areas, whether you wanted a sense that the Fed was going to go slower versus faster on the taper because they're going virtual with Jackson Hole, or, approval of the vaccine by the FDA in a formal way. All these things just, to me, feed the storyline that it's been tough to turn very negative. Meanwhile, even the meme stuff in crypto has gotten revived.
Although the record high is kind of misleading, because if you're in energy stocks, you're in a bear market. If you're in airlines, you're in a bear market. If you're in small caps, you've been down 10% from the high. So yes, the market has hovered near record highs, but it's been a rotating way of doing it where there has actually been a lot of pain.
Without a doubt. And I think the bullish spin on that, because it's a bull market and you automatically get the bullish spin, is we had our correction. It just happened in spots. It just was sort of internally we got a reset, and therefore those things can bounce and help out on the upside, even as they have a lot of catching up to do.
Josh, what do you make of the enthusiasm today?
I think the last thing Santoli said was like the key point. We had rolling corrections all year. And if you own individual stocks, then you know it. You don't need me to tell you. If you look at the IPO index ETF, it's down 15% from March. So that's like 6 months of torture, while the S&P went up 15% in the same period of time. The SPAC index, SPAK is the ETF if you want to follow along, is down like 40% in that same period of time. That's a rolling correction. And arguably, it's in the place where the correction is most deserved. You had a reopening correction because of Delta. Those stocks are ripping today on the vaccine FDA approval news, fine, but they all corrected. Like, pick one, every one of them. But for me, the real story is the Nasdaq. This is a rip for the ages. We are now up 3.8% from the Thursday lows, LOL, back to an all-time high. The QQEW, which is the equal weight Nasdaq, is pennies from an all-time high, so it's not just FANG. But can we please talk about FANG? Because you could name 80 energy stocks, add them all up, they won't mean anything relative to what I'm about to tell you. Google is printing an all-time record high right now, up 60% year to date. I talked about it in January as my favorite of the FANGs for the year. Happened. Added $700 billion in market cap. It's a $1.9 trillion market cap. None of these energy stocks matter, whether they're in a bear market or not. And then you take a look at NVIDIA. OMG. The stock is up almost 5% on the day. It's up 69%. Nice. Year to date. And this is a massive market cap now. It's $500 billion. So what are we talking about? Alcoa? Like Carnival Cruises in a correction? The big picture is that companies are doing great. Share prices are advancing. Equal weight as well as market cap weight on the Nasdaq. That's what I like to see after a dip like we had last week.